Which growth stocks could be winners in the new year? We researched thousands of stocks and we came up with a short list of 7 names that could be poised to climb. And in this video, we'll tell you about every one. But first, let me explain how we created this list of growth stocks. Now, as the name suggests, growth stocks represent companies that are growing more than the average business. And that might be because it's a younger company that is growing faster than an older business. It might be because there's some trend that's helping a particular company grow faster than normal. Whatever the reason, we need to establish what would represent faster than normal growth. So we started by looking at the average growth expectations for S&P 500 companies. According to Wall Street estimates, the average company in that index is expected to see sales growth of around 6% next year and profit growth of around 13%. Now we wanted to compare that to expectations for companies within the Russell 1000 Growth Index, which is a more targeted index looking at big companies that are expected to have higher than normal growth. Within that index, Wall Street is expecting that we'll see sales growth of around 11% next year and profit growth of around 16%. So that became our guiding light. We narrowed our list of potential stocks to look at to companies that are expected to see both sales and profit growth of at least 15% next year. But just because a company is expected to grow more than the average business doesn't mean that the stock is a buy, because in the stock market, generally investors are anticipating growth. And a reminder that we're already in a bull market, which means a lot of growth stocks have been hot, and that is based in part on their growth prospects. So that got us to the next part of our analysis, which was to try to establish what kind of upside can you expect from a stock when you're already in a bull market. And to do that, to set a benchmark, we looked at one of the more bullish calls for the S&P 500 broadly speaking next year. Strategists at the Wall Street firm Oppenheimer believe the S&P 500 can rise about 15% in 2025. So we then targeted stocks of companies where the analysts on average believe that the stocks can beat that performance next year. And to do that, we looked for stocks that are recommended by a majority of the analysts who cover them. As I mentioned, those analysts had to be projecting that the stock can rise at least 15%. And we targeted stocks of companies that are covered by at least a dozen analysts, because if you're working with a smaller sample size of analysts and their recommendations, the numbers can be skewed, they can appear a little bit biased. Now, after we researched all of that, you might still be saying to yourself, John, growth stocks have already had this big run. Do they really have value at this point? And it's a fair question to be asking. So we added another layer to our analysis by looking at the price to earnings growth ratio, for short, the PEG ratio, which a lot of analysts like because it can help to determine a stock's value compared to its rate of growth. And generally speaking, if that PEG ratio clocks in below 1, analysts will say, yes, it does offer value. As soon as we added that to our mix of analysis, a whole bunch of stocks fell off our list. And impressive companies, from the weight loss drug maker Eli Lilly to DraftKings or the e-commerce play Mercado Libre. So that was our analysis. Want the list of stocks? Here it is. But first, a friendly reminder, this is not financial advice. Okay, going through these stocks in alphabetical order. First up, AMD. The chip maker is expected to see revenue growth of more than 25% and profit growth of more than 50% next year. Wall Street really likes the stock, sees more upside ahead, and when you look at the PEG ratio, it looks reasonable for a growth stock. Our next stock is Micron, which got roughed up in the markets recently. Still, on average, expectations are that revenue will grow more than 50% next year. Profit growth expectations are much bigger, but that's because the company is coming off a lower base of earnings. Overall, analysts are still pretty constructive on this stock and see upside. And based on the PEG ratio, same story to AMD, the valuation looks reasonable. Our next stock continues with the chip theme, NVIDIA. This stock pretty much unavoidable if you're having a discussion around chip makers, and because the stock had an insane move, everybody's got an opinion at this point. But let's just stick with the facts. on Wall Street on average, the analysts would not be surprised to see 50% revenue growth, if not more. They're expecting a similar lift in earnings. Most of the analysts still like the stock, they see upside for it, and it checks the box on the valuation metrics. Our next stock is Pinterest. Now, Pinterest just squeezes by on our revenue and profit requirements. Analysts are expecting both will be up by at least 15% next year. Speaking of Wall Street, the analysts do like this stock a lot. About 3/4 of them recommend it, and they see it moving higher from here, and it met our bar on the valuation. Okay, the next stock we wanted to flag is Six Flags. And I feel like we need a record scratch here. Oh, thanks very much. I say that because we just talked about a whole bunch of tech companies, and now we're talking about a theme park operator. But remember when I talked about how a growth business can be impacted by new variables? Well, with Six Flags, it merged with its rival Cedar Fair, and that's creating a lot of opportunity. On average, analysts expect revenue to grow more than 25%. They are expecting that profit growth could be substantial off a relatively low base. Now, the upside for the stock here is not as dramatic in terms of the expectations as some of the other stocks that we talked about, but it still met our 15% threshold. And the general consensus from the analysts is investors aren't quite giving this profit potential story enough attention. Our second to last stock returns us to the chip arena, Taiwan Semiconductor, which on average is expected by analysts to see revenue growth of at least 25% and profit growth potentially of 30% or more. The valuation metrics look pretty good. Keep in mind though, this stock has had a pretty strong run. So when you look at the average expectations for what the stock will do, they are more muted than some of the other stocks that we talked about, but it still met our 15% upside threshold. Finally, the last stock on our list is Uber. Now, I've talked in other videos about how Uber stock has lagged the market this year, in part because of growing long-term concerns about potential competition with Tesla, which is building its own robo-taxi network. That being said, Uber is still a heavily recommended stock on Wall Street. On average, next year, analysts are expecting revenue will grow more than 15%, profit could grow more than 25%, and when you look at that PEG ratio, the valuation seems reasonable. Okay, that is our list of 7 growth stocks to watch in the new year. Our thanks to marketlabnewsletter.com for the graphics in this video. You can check them out in our description. Thank you for tuning in. What growth stocks are you watching? Let us know in the comments, and don't forget to subscribe so you don't miss our next investing video. Happy New Year!